Welcome back. Let's talk markets the way forward. Get a picture of the earnings season so far. Unmesh Sharma, the head of institutional equities at HDFC Securities, is with us on the show now. Unmesh, morning. Thank you very much for joining us. Thoughts on Eicher Motors look like a very good set of numbers, but Morgan Stanley is pointing out that there is rising competition from the likes of Harley and a couple of the other brands, global brands like Triumph, and that makes them a bit worried about Eicher Motors. How would you assess Eicher Motors' numbers, the prospects, and were there any earnings upgrades on the stock?
Look, this is a stock which is under our coverage. On our model portfolio, we have an underweight stance on this on a relative basis. So actually, we hold a zero weight on this, even though it's in the Nifty. Eicher Motors is a segment, that's 350cc to 650 basically, is something they've dominated for a long time. Particularly at the lower end of that band, but this is a space which is continuously under attack from a meaningful number of competitors. There's Honda. There is also the tie-up of Bajaj with Triumph, and so on and so forth. And this is not a space which is going to see any abatement of competition, so as to speak. So from that perspective, I think an analyst has a view that this is something where valuation's not really that attractive. So from that perspective, while we have an ad rating on this name, this is it's not a high conviction buy idea for us, and has a zero weight in our model portfolio.
You have an ad rating, but you don't recommend holding it in your model portfolio.
Yeah, so let's put it this way, that we like the long-term prospects of the premium segment in the two-wheeler space. We do believe that premiumization is a real story. It's not something which is immediate, and at these valuations, while we add to a large extent, is something that if people hold, they can hold on. But at the same point in time, is this something that on a high conviction we are asking people to buy? Then the answer is no.
Okay, got that. Unmesh, size up the rest of it. I mean, all of earnings season, we're pretty much at the fag end now. How many upgrades did you have? Were there a lot of pleasant surprises? And which are the pockets where, incrementally, if at all, you were pushed to take a more favorable view? Tell us which those pockets might have been.
Okay, so taking a step back, honestly, if you look at the earnings season, it's gone broadly as per our expectations, with the exception of the IT sector. First, let me set the macro context. We are actually much less positive on earnings for FY24 as compared to the rest of the street. If you may recollect that around 45 days back, the earnings estimates for FY24, because FY23 is more or less done, right? So we're looking more as to what happens to FY24 earnings. And the consensus numbers were broadly in the range of earnings growth of between 18 and 21%, with an average of around 18. That's come down to 15, 16, but we are at 12. Okay, so to some extent, we have not seen earnings numbers from our side change as much, despite the fact that on the margin there was not that much positive surprise. So what we are effectively saying is that we are well below street as far as FY24 earnings are concerned, and we continue to remain that way. Specifically, there has been disappointment in the IT sector, broadly in line expectations, as per expectations in the financials and so on and so forth. But broadly speaking, earnings estimates have got cut, but they were across the street, but not so much for us.
Any pleasant surprises for you? Anything that came out on top beyond expectations? Let's look at consumer. A company like Asian coming out with these blowout volume numbers. Some of the other FMCG guys have managed margins pretty well. Anything exceptional where, at a stock level, where you've had a significant add or an upgrade because of earnings?
No, unfortunately, not yet. But at the same point in time, I think where we did see signs of positivity coming through is definitely on the fact that sequentially there has been very solid numbers from the financials, which is not different from expectations. And more importantly, sequentially we have started to see improvement on the cost part. So the big issue of margins actually coming off across the consumer sort of basket has that big risk has abated to a large extent. Well, there are some concerns on what will happen to rural demand because of El Nino and so on and so forth, but broadly, that is also something that the market seems to understand well now. So from that perspective, I think the big change in our stance would have been that at the margin, we have become a little bit less negative. So we were a serious underweight, to be honest, on two sectors. One was IT, which we are getting less negative, and similarly on the consumer side, where we are getting less negative because of this. So have we really upgraded something or something? The answer is no, but on these two, we have become a little bit more positive than before.
Okay, you're a little bit more positive on IT as well, like you mentioned. So, Unmesh, specifically on the mid-cap IT companies, because some of the results have been very positive, right? I mean, just yesterday we had Zensar, Intellect, which were looking good. Even earlier, a lot of the mid-cap IT earnings have been far better than what was expected for all the talk of deal deferrals, etc. Is this a space that you would, anything from this space that you would be okay getting into now?
Yeah, so if you look at our model portfolio, to a large extent, while we have a very slightly mildly negative view on the IT space, I think that's to a large extent because of the fact, exactly what you're saying, which is that we are more negative on the larger cap IT. Names less negative now, given the valuations have come off. But at the same point in time, the earnings uncertainty on demand continues to remain. But if you look at the way in which our model portfolio is also constructed, okay, amongst the benchmark names, we have the largest overweight on Tech Mahindra, and we do have Cyient in there. We also club the exchanges in there. So we have some names in the mid-cap ER&D type of companies in terms of specific, very bottom-up small caps to offset the underweight that we have on the large caps in there. So we are kind of on the same page as what you are indicating, which is that we believe that there is a little bit more opportunity to get very specific on bottom-up names in the mid-tier ER&D as well as in the IT services companies.
Unmesh, very quickly, I wanted you to elaborate on the point. You said that you are now less worried about bank margins declining. The narrative was that NIMs of banks will come under pressure, but you said that risk is now abated. Could you explain why?
Oh, no. I think I may have said two different things. What I'm saying is that the non-financials margins, because these are two different things. So the way we look at margin, if you look at the entire basket of 230 stocks that we cover, we look at margins from two perspectives. One is we split it up between the financials and non-financials. Okay, so and on the financials side, we believe that broadly, okay, this is now I'm talking about the entire basket, that there is now going to be no incremental positive surprise on margins. Okay, so that's one point. What I was saying was that if you look at the consumerish basket, okay, or for that matter, where the input prices are either import-led or they could be led to linked to things like the petrochemical chain or something of that sort, and that specifically is an input into the consumer basket, especially the FMCG, for example, then there the risk because of base effect as well as incremental moves is actually abating. So what we are saying is that financials margins are broadly around peak. Okay, individual names here and there may be different, but at the same point, as a basket, they are around peak. But on the non-financials consumer basket, the margin pressure has reduced. This is what I was saying.
Got it.
Yes, we got that. Quite insightful. Thank you, Unmesh, as always, for joining in today. And we look forward to connecting again on the next call. You have a good one. Okay, we will take a quick break on that note. On the other side, lots of earnings today as well. Cipla, Tata Motors, IGL, to name a few. We will get you all the key expectations.